Most beginners think investing is about finding the investments that grows the fastest. But experienced investors often ask a different question. What role does this money need to play? That is where bonds become interesting. Because bonds aren't necessarily exciting. They don't have the same headlines as stocks, and they rarely create the feeling that you've discovered the next big opportunity. But that's exactly the point. A bond is essentially a loan. You lend money to a government or company, and in return, the issuer typically pays you interest and eventually returns your principal, assuming it meets its obligations. Now here's where things get really interesting. Imagine you bought a bond paying 5% interest. Later, new bonds enter the market paying 7%. Suddenly, your 5% bond isn't as attractive. If you wanted to sell it before maturity, its market value would generally have to fall to make it competitive with newer bonds. And if interest rates move in the opposite direction, the market value of your existing higher-paying bond can generally rise. So bonds aren't simply about collecting interest. They're also about understanding how money, time, and interest rates interact. But the deeper lesson is psychological. Imagine you're investing heavily in stocks. The market falls 30%, and suddenly your emotions are screaming, "Get out." That's where having assets designed for different purposes can matter. The goal isn't necessarily to make every part of your portfolio exciting. The goal is to build something you can actually stay invested in. This is one reason sophisticated investors may use bonds or other fixed-income investments alongside stocks. Not because bonds are guaranteed to make them rich, and certainly not because bonds have no risk. They can face interest rate risk, inflation risk, credit risk, and other risks. Instead, bonds can serve a different job. Stocks may be focused on long-term growth, cash may provide liquidity, bonds may provide income, diversification, and potentially greater stability than stocks, depending on the type and market environment. And that changes the psychology of investing. Because sometimes, the best investment isn't the one with the highest possible return. It's the one that helps you remain rational when everything around you is screaming to panic. For a beginner, that's a powerful shift. Stop asking only, "How much can this investment make?" Start asking, "What job is this investment supposed to do?" Because building wealth isn't just about choosing investments. It's about building a financial system that matches your goals, your time horizon, your tolerance for risk, and most importantly, your ability to stay disciplined. Bonds aren't boring. They're a reminder that intelligent investing isn't always about chasing excitement. Sometimes, wealth is built by giving every naira a purpose and having the patience to let that purpose work.